Then we're going to get to our next guest because he recommends sticking with internet stocks such as Alphabet and Meta. Joining us now, Rosenblatt Securities analyst Barton Crockett. He has a buy on Alphabet, Apple, and Meta. Barton, what do you make of that move last week, and why do you believe it can continue?
Look, I think that there's a lot of kind of emotion out there, and so last week I think interest rates, the view is that they're pulling back, and that helps kind of your long-term multiple assumption. So that's good for many of these high multiple stocks. I think that when I look at our coverage group and the internet part of that, my preference is still for the quality names that are driving earnings, and I think the biggest movement has been in the names that are still kind of pre-earnings or marginal earnings, so the multiples are very high. I think that a lot of the hope here is that the environment, that the macro is stable, and that if we look over the balance of this year, your comparisons get a lot easier as you go into the second, third, and fourth quarter versus the first quarter. So while you might be down a bit, you might be flattish in terms of your revenue trajectory starting the year. By the end of the year, you can be up in a steady state environment. That's great. I'm just not certain that that's how it's going to play out. If the macro gets more difficult, estimates are going to be coming down, and you're going to be looking for the safer stocks, which in my mind are the guys with some good earnings and good multiple support, like a Meta, like an Alphabet, and I'd also argue for Apple.
Right. Obviously, Meta shares have been an incredibly strong performer as well during the course of this year, in part, or mainly, it would seem, due to the efficiency quest of its CEO. How important does that become in this overall environment, those companies in particular that seem to be embracing the idea that they should do more with less?
Look, Meta is a special situation. It's crazy because it's such a large stock. But they're pulling so many levers on expenses that we're engineering earnings momentum that is well in excess of what you can see at the other companies, just because of what Mark's able to do on the expense side. I think there's more that could happen. I think one of the ideal outcomes for this company would be to take reality, that segment, spin it off. It doesn't need to be in the Meta capital structure. You're getting no credit and a pure penalty for that, and a separate capital structure. Those investors who align with Mark could rally into that. Is he talking about that? No. Do I have a lot of faith that that's going to happen? No. But sometimes when things make sense, they could happen. So there's option value there, plus earnings value, plus a company that's managing itself much better. So a really tremendous story in a difficult moment for that stock.